people who can make it a
And you can
reality.
monitor how often
Imagine
the
turning
seizures
your
are,
startup
how
dream
serious
into
they
a
are,
thriving
when they
business.
occur,
Correct.
and so on and
It
so
all
forth,
starts
and
with
try
that
and
one simple step.
help those people live better
So
lives.
what are you waiting
Yeah,
for?
and I think it's an extension
Grab
of
your
things that we all
phone,
know well, which is
hit record,
continuous monitoring, whether
and
you've
let
got
your idea
an
fly.
iPhone or an
The
Apple
future
Watch
of your
or
startup could be
Ring.
just one
These
video
ideas
away.
that the more data you can
Remember,
collect
be clear,
continuously for a person,
be
the
passionate,
more information
and
you
most
can get
importantly,
people to make
be
better
you.
choices.
We can't wait to see what you've got. Let's get funded now.
You're considering?
Yeah, just as an aside.
My wife loves her Oura Ring, and she constantly tells me when it's my turn to take care of the kids because she hasn't gotten
The Oura Ring.
Yeah.
Better choices for everyone.
That's right.
Driven by better data.
AI is a theme that we've all been focused on as well. I know Emily recently was at a conference and talking about VC. I was recently at a conference talking about AI, and you're, I guess, investing in AI as well. I see it mentioned for Symbiosis, which is a company that you've invested in. It's a treatment support tool for women with breast cancer?
Yeah, the category is called clinical decision support. It's providing clinicians, physicians better tools to make better decisions for patients and patient care. And that's more and more important these days when we have a profusion of different types of, say, drugs and interventions. How do you make the best decision for each person with more and more information? And so the AI is a way to, as you know from other fields, combine different kinds of information of different sorts and sources into a single unified view. And so that's increasingly important to patient care as well.
How are you seeing AI being used in healthcare? Is it more just a tool to help professionals? Because I have to admit, I went to a doctor and there was an AI, I guess it wasn't a robot, but it was a phone that he held up and it was taking notes.
Yeah.
But I've also heard about, AI being used as a diagnostic tool, reading MRI images. What are some of the surprising ways that AI is being applied into healthcare that excite you?
Yeah, well, so you gave some great examples, and so that's at the delivery of healthcare end. But way up at the beginning, where scientists are looking for new insights, AI is helping them in a similar way pull together a bunch of different information about the science they're studying, come up with new insights, and ask the next question. So it's accelerating the pace of basic research that gives rise to all these innovations that eventually show up in the healthcare setting.
So going through basically mountains of data that would take you and your team probably months or years, and AI can do that in a matter of hours or days.
Yeah, and it's bringing all that together in a way and helping us visualize it also in ways that are novel, so you can kind of poke and prod at it from different directions and come up with new insights, which is what's so critical for science.
So when you find these companies or these founders and decide that you want to invest in them, how much further do you take it? I mean, do you work with them to do other things that are necessary that maybe they wouldn't be good at as scientists? Since you have a consulting background, do you find people to help them do the kind of back end stuff that a lot of us can't do? I mean, how far along do you hold their hand?
Yeah, I really appreciate this question. Genoa was born because I'm also an ex-startup operator, so is everybody on our team. We love building these kinds of companies and helping other people build these kinds of companies. So we're builders for builders. And as you can imagine, the kinds of innovators who may come up with the latest thing in AI for bio may not also know about cap tables or preference stacks in the startup setting in venture. So we like to bring that knowledge to them to help them on their way as well.
How do you think about valuations right now?
Very carefully, I think is the answer. Yeah, I think obviously it's been a tough couple of years in the markets, which is having an impact on valuations up and down the stack. But I think probably a pretty healthy reset. Things did get a little out of control, in 2020, 21.
But is that because, SVB collapsed or because everybody would rather invest in NVIDIA?
Well, it's a multifactorial, right?
No, I mean, what's made it tough? Because I've heard that also from other VCs, and I've heard, my friend Jesse Draper from Halogen talks about a recession, and I'm like, what recession? You know?
It's fine, yeah.
But a lot of businesses I know are feeling it.
Well, I think you do get this kind of circular situation where investors are working very closely with the companies in their portfolio, helping them through a tough time. Even just the bandwidth to look at the next thing, much less the capital, is a little bit lacking. But as I think the macros start to trend positive, we're starting to see signs of things moving around a little bit. Liquidity is the word on everyone's lips. We really need to see some of the big exits in companies that have stayed private quite a lot longer. As the IPO window opens up, as we see more acquisitions, we think that moves through the whole stack.
But I imagine in this sector, I mean, I just look at the companies that you are investing in, and I think, why doesn't Apple just buy that? You know? So it doesn't have to be an IPO.
No, it doesn't. And historically in bio, most of the exits were predominantly in M&A. You know, you have really market leaders in each of these different bio segments, whether it's healthcare, pharma, agriculture, industrial bio. Right? We're not talking just healthcare. The many trillion-dollar sectors depend on bio. And historically, the exits have been by M&A to those leaders who are looking for the innovation and the technology to put into their commercialization. Part of why we started Genoa when we did is that we really believe that the impact of bio is now significant enough that more and more of these companies deserve to be freestanding, publicly traded, and so we're excited about those as well.
How do you distinguish between, or I guess, how does your background help you distinguish between something like AI hype and an actual piece of value?
Yeah, it's part of why we like to go very early, because you do have to have the expertise to look at the raw data. You know, we read papers, we read grants, we look at posters at scientific conferences, and back to that sense of going to the fundamentals and not just believing the story is really important for making a distinction there. Yeah.
I'm just looking at, you know, your CV and listening to you talk. Are you from Georgia, or?
I spent a fair bit of time in Georgia. Yeah, my undergrad was at Georgia Tech. My family's still there.
Georgia, and then Yale, and now San Francisco.
Right.
What is it like in San Francisco right now?
San Francisco is a really unique geography. I moved there deliberately to find these kinds of companies because it's truly a melting pot for different kinds of science and technical disciplines, as well as different types of businesses, people from all over the world. And so you get this culture of really free-flowing ideas, a kind of yes and, let's try it, you know, as opposed to, I would say, most other places in the world that tend to be a little bit closed, a little bit skeptical, which is healthy, but it's helpful in that laboratory to have a culture of trying things.
The venture capitalist that I interviewed last night, Michael Mignano from Lightspeed, he's New York, all in.
Weird.
He was like,
I thought all VCs lived in San Francisco.
No, he said New York, but he does more consumer-facing companies.
It makes sense in different spaces. Yeah, I mean, I love New York. I lived here for 3 years when I was at McKinsey, then moved to Boston, which is where I got into biotech, which I think suffers by comparison to New York. And so I spent a lot of time back here. It's the best city in the world. However,
thank you.
To do the work that I need to do for right now, it needs to be set up in San Francisco, and then I have the joy of coming back and visiting you.
Cool.
Yeah.
Well, we really appreciate it. I hope you come back.
Thanks.
Because it's fascinating stuff. Jenny Rook, their founder, managing director at Genoa Ventures, talking to us about early stage high growth investment. We are going to come back and talk about, in the drive to the close, investing with George Young, portfolio manager at Villere Funds. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got stocks holding on to gains. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. The Dow is outperforming today, up 375 points. S&Ps are higher by 0.2%. The NASDAQ is up by 5. The U.S. 10-year yield at 4.41%. Gold is higher by 37. Oil is also climbing, but Bitcoin tops 99,000. Among the main 11 S&P sectors, leaders were industrials and consumer discretionary. Telecom and tech were in the red. And leaders to the upside in the Dow, Boeing and Nike, while NVIDIA fell 3.3% and led to the downside. In deal news, Ally Financial is set to weigh a sale of its credit card business. And wrapping things up, Amazon made an additional $4 billion investment in Anthropic. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, Matt Miller here in the Bloomberg Interactive Brokers Studio with Emily Grafeo. Carol and Tim are off today. I'm looking at a market, Emily, that continues to climb higher. The Dow Jones Industrial Average up to 44,236. Only reading that off the top of my WEI screen. But the S&P, it's only up 0.2%. However, it's up for the week. HCP space W shows me that the S&P is up 1.5% this week after a 2% drop last week.
And that was after a 4.6% rise the week before that, and then a 1.3% drop the week before that. So it has been a wild fall, Matt Miller.
Yeah, absolutely. But 59.60 is the level we're looking at now. So we're really only 40 points away from the big round 6,000 number. We pierced it, obviously, in the week after the election, but came right back down. Let's get over right now to George Young. He is a portfolio manager at Villary Funds. And George, let me get your take on just first the broader market here. There was a huge bout of optimism after Donald Trump won and Republicans took the House and the Senate. It seems to have calmed down a little bit, but we're still at very high levels. Do we continue going up into the end of the year?
I think we do. It's sort of a tale of two cities, however, because what you've seen in the past year or two has been the dominance of the Magnificent Seven. I'm sure all your listeners are keenly aware of that. But those of us who play in the small cap, mid cap world have not really seen those benefits. The Magnificent Seven has dominated things. The S&P is up 10% per year for each of the last 3 years. Small cap world, Russell 2000, basically been flat for 3 years. So all of a sudden in the last 6 months, and pronounced, especially in the last 10 days or so, we've seen more credibility and more viability in the small cap sector, which is great for us, those of us who are in there.
Tell us about the small cap thesis here, because you're right. We saw a big rally in small caps after the election. I write about ETFs, and there were a ton of people piling into ETFs that track small caps. So just a lot of money and I guess optimism here. But what is, I guess, the case here for buying small caps?
Well, the case here is that you want to buy what's cheap, and that's nothing new. You want to buy low and sell high. And you also don't want to fall in love with the stock. There's an old adage, don't fall in love with the stock, it won't love you back. Nonetheless, people have taken the Magnificent Seven, and I'll pick on NVIDIA in particular, which happens to be down today. People are saying things like, I'd never sell my NVIDIA. I love NVIDIA, that sort of thing. You can love grandma's pearl necklace that you inherited, but when it comes to a stock, don't fall in love with it. It's just not something that should be that emotional. It should be a very objective sort of game. You look at PE ratios, you look at any objective measures that will make a difference in what the market's going to do in the future. That's very important.
Talk to us about how you're thinking about the rise in Treasury yields, because that could also dent, I guess, small cap stocks, any stocks really, if we do see treasury yields continue to climb. We're now over about, well, I can't pull it up, but about 4.4% on the 10-year right now.
Right. So the 10-year is very liquid. You're sticking your neck out a little far buying a 10-year, but that is sort of a proxy for the bond market. And remember that if you're going to buy a corporate bond, take a little bit more risk, you can get, let's call it a 5% yield right now in recognizable corporate names. So that's a very big challenge for the stock market. Bond market yields are attractive right now, in contrast to where they were 2 or 3 years ago, where you were buying 2% bonds, nothing to get excited about, but you wanted stability during COVID, and that made perfect sense. Now what's happened is the bond market is offering attractive yields. And it's interesting because, yes, you now know the election's over. We know who won. We know who controls the both houses of Congress. You know what the policies are likely to be. You don't quite know what the effect's going to be on the market. That's all good from a domestic standpoint, but the bond market, the U.S. bond market, is international in scope and has huge impacts worldwide. Everybody around the world trusts the U.S. Treasury market. So when you see yields going up, that means it's a higher bar for stocks. Stocks have to return more to get people to invest in them. So if the objective measures are there, then you want to buy what is compelling value. Right now, we see that in the small cap stocks.
I saw at one point last week, I think stocks and bonds were yielding just about the exact same thing. I have a chart with both of those two lines, and they collided. I was thinking, though, you'd probably be much smarter to invest in stocks over bonds if you had to pick one or the other going into Donald Trump's second term, because he's much more likely to be passing market-friendly policies. Does that make sense? That's something you agree with?
Not exactly. I'd say some people might be better off with stocks. Some people might be better off with bonds. Remember, there's a huge panoply of different investors out there. You've got the long-term trust fund baby, I'll say. You've got the widow that's got a limited amount of funds. So in terms of what's right for everybody, it's a little bit different. But universally, I'd say introduce some bonds into your portfolio right now, specifically some corporate bonds that have some liquidity, some Ginnie Maes, whatever it may be, something that can respond to this potential or likely, I'm going to say, rise in interest rates.
Versus U.S. stocks versus the rest of the world, MSCI ex-U.S., or versus bonds over a longer-term chart. I get it if you're a widow, if you're living on a fixed income, that's a different story. But for someone who's going to be invested for the medium to long term, is there really any reason to diversify? Don't you just buy U.S. stocks and make money?
Well, let's go back to the beginning of 2022. And if we'd made that statement at the beginning of 2022, the only safe place to hide that year was in cash or in gold. Stocks, terrible. Bonds, terrible. I don't care if you're short-term, long-term in bonds, you had your head handed to you. It was a tough year. I'm not saying that's going to happen again, but anytime anything looks like a certainty, that's when you need to be cautious about things. So I'd err on the side of a bit of caution. And I'd say to most listeners, yeah, take a few chips off the table and put some bonds in there. It makes sense.
We don't have a ton of time left, George, but I did want to ask you about Lineage. This is a company that owns 482 global cold storage warehouses. Why do you like to invest in that company?
Well, a couple things. We went to visit one of their facilities on Monday, so I feel like I know it pretty well. They have the state-of-the-art technology. They have a federal inspector in their office who houses there because they know how much shipment goes through their facility. Anything that you eat has to be maintained correctly. And they learned during COVID how to turn inventory and get food in and get out. Think chicken, think vegetables, etc. And these can be a light freeze, means it's still nice and healthy, but they dominate the landscape. They just went public in July. New company. It's based as a REIT, so it has a 2% yield right now that's being increased. So unlike most REITs, you can have your cake and eat it too. You get growth and you get income. I think it's a great company.
All right. George Young, partner and portfolio manager at Villery & Co. on Zoom from New Orleans. Thank you for joining us.
You got it. Thank you.
Yeah, thanks so much. Real pleasure, George. Coming up, we're going to head over to our television colleagues. We're going to join Romaine and Scarlett for the close. This is Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, Carol Masser and what's his name?
Tom Keeney?
They're out today on the DOS, as the British would say. They get travel days. I've never gotten a travel day before in my.
They did a good job.
out.
Carol and Tim Stenevec, they did a great job at the Schwab Investment
They
Conference.
did a very good job.
They got the CEO to say that he feels silly for not buying crypto.
I feel silly for not
CEO
buying
of Charles
more crypto.
Schwab.
Yeah, I mean, every one of us who's not a Bitcoin billionaire should feel silly for not buying it when it was trading. I looked at it, I told you this earlier, but I covered it maybe 11 years ago. I spent 2 weeks living on Bitcoin only, right? And the whole reason was the newsroom was following the rise of Bitcoin and saying, oh my goodness, it's gonna be worth $1,000 soon. And that was just unimaginable. The fact that this digital asset could be worth $1,000, this line of code could be worth $1,000. And so I stopped using dollars for 2 weeks, and I had a camera crew follow me around as I found a grocery store that accepted Bitcoin and a bar that took Bitcoin, and I think kind of ironically a GameStop that took Bitcoin. And it was a pretty fun little experiment. And I had bought one for 600, and then I bought another for 800 as the price was climbing. And then the story was over, and I had been pretty psyched about it. I'd gone deep into the world of like Reddit, libertarian, Bitcoin weirdness, and I liked that world. So a few weeks later, Joe Weisenthal, the stalwart, right, sends me a text and says, hey, if you liked it at 600, you're going to love it now at 250.
And what did you do?
I thought, you know what? I do love it at 250, but I felt like it was unethical as a reporter covering the asset to actually buy it then.
Yeah.
And then I watched it drop to $75, you know, and I thought maybe I should pull the trigger now. But
you clearly didn't, because you're still working here on a Friday at basically market close. You've been working all day.
Working on the railroad. Yeah, so I didn't buy it, and I feel silly too, you know? I should have thrown my moral and ethical concerns to the side and bought as much Bitcoin as I could get my hands around at $75.
I'm not going to comment on that. I haven't worked at Bloomberg News as long as you have, so.
I wouldn't be working here any longer, right? I probably would have quit when it hit, you know, 20,000 back in 2017. And at that point, it dropped down to like 3 or 4 grand, and then it climbed up again to 50 or 60,000 in 2021, and then it dropped back down to 15,000, and everybody was losing hope, and now it's climbed back up to 100.
Not yet. We're almost there.
What's
right?
the
We
price?
haven't actually. We're at 99,000 now. 288.
All right, and I think, you know what, these big round numbers, as we heard at the top of the show from Stacey Marie Ishmael, who runs our coverage of Bitcoin, it's tough for the market to push through these. But, and it looks insane if you look at the line chart, right? But if you make it log, it's pretty interesting. It took 11 months for Bitcoin to go from 1,000 to 10,000, and now it's taken 7 years to go from 10,000 to 100. We're not there yet, but we're almost there. But you know it's coming, right?
Oh, yeah. Well, I mean, what's also been interesting is that the rally has not taken Ether for a ride at all. That's the second largest cryptocurrency. That coin is actually down today, and it's just only up 44% year to date. Compared to Bitcoin's 130% year to date gains,
I mean,
it's just lagging behind.
To me, it's Ether is weak sauce.
Okay.
I mean, Ether is a snowflake. Proof of work is the real deal, right? If you have to use like a nuclear power plant in order to generate a Bitcoin in a mining situation, that's legit. Proof of stake, you know, that's like so woke.
Just like people coding in their sweatpants on the computer.
It just doesn't really seem to be as OG as the big one, Bitcoin, and that's why it is not as big now. But who knows what the future brings? And unless you're talking about the next few minutes, because I know what that future brings. We're going over to our television colleagues, Romaine Bostick and Scarlett Fu, and joining them on the closed simulcast. Stick with us for that.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through the Closing Bell, a global simulcast, and it starts right now. We're joined right now in the radio booth by none other than Matt Miller and Emily Grafale. I'm not sure what they did with Carol Masser and Tim Stenovic. Nevertheless, we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, setting up here for a fifth straight day of gains, Matt, on the S&P 500, a weekly gain to boot. But the big story has really been that rotation into some of those cyclical and small cap names.
Yeah, and that's a story I've been hearing about for a few weeks now. I guess the setup is right for a rotation into small caps. And you also didn't really get like a holy camole earnings report from NVIDIA. I guess it was better than a stick in the eye, but it wasn't the typical beat and raise that you saw NVIDIA do the last few quarters. And maybe it took a little wind out of the sail of the mega cap tech stocks, or gave people permission to continue rotating into the Russell.
Yeah, the big tech stocks really dragging today. NASDAQ 100 still probably going to finish in positive territory, but some of those individual names just can't compare today to the small caps, Russell 2000 and the Dow.
Yeah, although the Mag 7 did finish the week up about 1.3%. I feel like another big story of the week was Bitcoin. We're all watching for that $100,000 level. We haven't quite gotten there yet. We're just talking with a technical analyst, and he says technical analysis is the only way that you can explain the momentum in Bitcoin prices, because fundamentally the story hasn't really changed all that much.
Yeah, absolutely. Here, as we get the closing bells in New York, the clapping, of course, starts, and a lot of reasons to clap. The gains may look modest on the screen on the day, but you add them all up here, and you're looking at a pretty strong week for most of the major indices. The Dow Jones Industrial Average is going to close out the day higher by more than 400 points, or roughly about 1% on the day. The S&P 500 adding about 0.3%, up about 20 points, but still below that 6,000 level where it's going to settle in. The NASDAQ Composite adding about 0.2% gain on the day. But the star of the show, again, we have to go back to those small caps. A 1.8% gain on the Russell 2000, a 1.7% gain on the S&P 400 mid caps, and a 1.1% gain on Dow Transports.
Yeah, I mean, I guess a little bit of a barbell situation, if I can use that term, because the Dow, although the kids don't really talk about it anymore, is much bigger cap stocks, right? And the Dow is up 1 full percent as the S&P underperforms, as the NASDAQ underperforms. So it's the Dow and the Russell that are the big winners in terms of the major U.S. averages.
Yeah, very well said. Within the S&P 500 today, you have 381 gainers versus 118 decliners. So let's take a look at the IMAP. That big red slice is tech, and that group is down about 1/5%. Utilities and communication services also lower, and so that is why the S&P 500 has not done as well. The gainers are some of those cyclicals that we've been talking about. Industrials up 1.4%. Consumer discretionary gaining 1.2%. Financials up 1.1% as well.
In terms of the gainers, there are a lot of them, but they're relatively small stocks. Again, these are not the big names that you're used to hearing every day, which maybe is a bit of a relief for those of you here sick of hearing about NVIDIA every day. Copart is a company that I think is really interesting. They auction off damaged cars for insurance companies. I think it closed up 10% or more, its biggest gain since March. They reported fiscal first quarter revenue that rose 12% from the year ago period and beat estimates. So people like Copart today, people like Helen of Troy, those shares climbing after they agreed to buy a nail care company called Olive and June. Haven't heard of it, but it's a $240 million deal. Apparently, it includes a $15 million earnout subject to performance over a few years, 2 or I think 3 years. So Helen of Troy shares climbing as well. Moderna is a company that we all heard of, obviously going through the pandemic. mRNA is the ticker there. Those shares up after the company said that RFK Jr.'s nomination to the Department of Health and Human Services is unlikely to mean removal of vaccines. Now, I guess they didn't need to come out and say that for us to believe it. I've heard that from a number of vaccine experts on this program over the past couple of days, but shareholders seem to be at least a little bit supported by those comments from the company directly. And then I threw in one just for my namesake, Matthews International.
That's why you picked it?
The smallest company on the list. I thought it was interesting because they make caskets, memorials, and cremation equipment.
Wow.
That's a demographics play, right? The shares rocketed today. They were up like 20%. 21%. Cremation equipment, I guess, is a hot seller right now. Fourth quarter sales beat Wall Street's expectations.
Okay, well, if you haven't heard of all of the companies that Matt picked for his gainers, you've most likely heard about the companies that were the decliners today. I'm looking at NVIDIA. It's actually about flat on the week, but it did close lower, over 3% today. This, of course, after it's already up 186% year to date. Speaking after the release of quarterly results, Chief Executive Officer Jensen Huang said that NVIDIA's highly anticipated Blackwell products will ship this quarter amid very strong demand, but the production and engineering costs of the chips will weigh on profit margins. I'm also looking at Intuit. This is a tax software company. They gave a second quarter forecast for adjusted earnings that came in weaker than expected. They see EPS $2.55 to $2.61, estimates of $3.23 per share. Barclays said they didn't see much in the results to change the investment story, but they still lowered their price target on this stock to $775 from $800, and that stock closing down almost 6%. And then another mega cap tech stock, Google, the third straight day of declines, closing now at the lowest level since October 24th. The news today coming that Alphabet risks a formal UK investigation over their dominance of web browsers on mobile phones. The UK regulator said in a statement on its interim findings that Google and also Apple can manipulate consumer choices to make their browsers, Safari and Chrome, the clearest or easing option. I picked Google as a decliner because Apple actually finished in the green today.
Good. I'm glad you were able to pivot. Carol would not have been able to juggle that, Emily. You now have her job. All right, let's talk a little yields here. Really interesting story this week in yields. Let's start with the 2-year yield, because for 5 straight weeks now, we have seen that yield go up. Remember, we talk about September, what it was. We were below something like 3.5%. We're now right around that 4.4% level, up about 7 basis points on a weekly basis. But the rest of the curve, it's really sort of a mixed bag. We saw a drop in yields on a weekly basis on both your 10 and 30-year yield, but that's been the seesaw, back and forth on a week-to-week basis. A lot of people really are not quite sure exactly what the next step is. But of course, the most sensitive part of the curve to any changes by the Fed is that 2-year, and that is decidedly to the upside, something to keep an eye on here as we close out the week. Matt.
Has everyone seen the Jaguar marketing campaign for their rebranding? Possibly the worst marketing campaign I've ever seen in my entire life.
Yeah,
Here,
I love it.
We have...
Where's the car?
Yeah.
There's no car in this video. I guess they're trying to project kind of a new age, maybe a woke kind of message.
This is woke?
This is woke?
Or maybe just tastelessness. I don't know
confusing.
What it is, but they have 17 million followers on Instagram, and last I checked, there were like 35,000 comments, none of them positive about this. Here's the logo. Look at that. The capital G and the capital U in the middle, but nothing else.
Yeah, woke.
I don't know what they're selling.
It's totally woke.
I don't know what they're selling.
I don't know what they're selling. I mean, maybe it's not woke. I don't know what they're trying to say with this.
Maybe it's just a commercial.
I just want to say Don Draper, the fictional Don Draper, is rolling in his grave. If you guys remember that Mad Men episode where he did the Jaguar ad. I don't know why they didn't just pull from Don Draper.
Oh my God, that would have been the best way to do it. I totally agree. The other story that we're keeping an eye on is McDonald's. You know those value meals that have been around since 2018, very popular. They're changing that up, and they're now creating this McValue line as well, which includes a $5 meal deal and a buy one, add one for $1 offer. And this is because the old value meal is no longer feasible because of inflation.
Wait, so they're lowering prices?
No, they're not lowering prices. They're no longer offering the value meal prices, which were low prices, and they're now offering something else called the McValue.
So this is a value meal, but not the value meal.
Yes, exactly.
Gotcha.
Value 2.0.
Interesting. Okay. You're a McDonald's person, Scarlett.
I am. I often go.
Yeah.
And
really?
Yeah.
Yeah,
I regret it the minute I go, but then, well, that's not true.
I'm
enjoying every minute of it until I'm done with the French fries. Then I regret it.
You didn't know Scarlett was like a fast food junkie? She just walks around. She just walks around the office here with a Big Mac.
The biggest value to me is going to be not having a heart attack in the next couple of decades because I've avoided McDonald's.
Oh, I don't know.
Emily, are you a McDonald's fan?
Yeah, I like the French fries. I'm staying away from the quarter pounders for a little bit, but
fair enough.
Maybe I'll go back to them.
Wait, what do you get if you get the quarter pounders? What do they have?
E. coli.
E. coli. Yeah. I guess that was the onions.
I think it's the lettuce, right? Or the onions? Okay.
Okay. All right.
All right. Well, hey, it's been a pleasure. I know Carol usually has some well-versed statement that she makes at the end of this simulcast, but I don't know what it is. I guess we're thanking our viewers
It's right there
on
on the
YouTube,
teleprompter.
on Bloomberg Originals. Is that still
Did they not give you a teleprompter?
Bloomberg Radio
in there?
And
They
Bloomberg
don't have a
Television.
prompter in there.
Oh.
Only we do.
Thank you. Bye.
There you go.
Bye, guys. Have a great weekend.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
No, she's much better at it, actually. And I mean, we're all worse off when Carol's not in the office. I hope she comes back soon.
From her long flight.
From her long,
flying
lazy
back,
flight from San Francisco.
When you fly back from the West Coast, it just takes up the whole day.
No, that's not how it works. You know, when I was a kid, if we went out to the West Coast to do a shoot, we flew back on the red eye. So Al Mayers made sure I was in my economy seat, by 11 p.m. San Francisco time, and I landed here in New York at 5 a.m. or 6 a.m. and came straight to work. There was no travel day, right? I wasn't babied or pampered. But I guess it's different now because we care about the way you feel. Mental health matters. We take it seriously. Emily Garfeo, Matt Miller here in the Bloomberg Interactive Brokers studio, filling in for Carol and Tim as they, take care of themselves, as they have a me day. And I'm excited that we're here, actually, because David Weston stays late every Friday for Wall Street Week. And it's always interesting, but I am especially interested this week because he's interviewed some of my personal heroes. We're talking about Christian Horner. We're talking about Gunther Steiner, right? We're talking about Sergio Perez. The leaders and drivers that make Formula One the most watched sports league in the world. 1 billion people will tune in to any given Formula One race. And that's, David, why it matters.
Yeah, one of the most expensive as well. It costs a fortune to do this. Yeah, we're doing this just for you, Matt, actually.
Thank you so much.
Exactly right. We also have Zach Brown, of course, of McLaren, which is really challenging now for the Constructors' Trophies, something that Matt follows clearly. So, yeah, we did take a look at Formula One. And a lot of us were consumed by Drive to Survive. And, of course, Liberty Media with John Malone bought, actually, Formula One, the entire sport. And now it's become very popular in the United States, as we know. And so we went over and we talked to just exactly the people that Matt talked about and talked about what goes into really making a winning team for Formula One.
It's an amazing sport. Crazy because of everything that's involved with it. And expensive because of what it costs.
All business is competitive, but maybe none so competitive as Formula One. How do you win in Formula One?
Ooh, good question. And there's lots of different wins you need to win in Formula One. It's all about people. Obviously, we're in technology business. It's about never giving up. It's about incremental gains every single day and learning from your mistakes. And you're constantly making mistakes. You need to win with people. So you need to be a great employer and have a great work environment, take care of people and their families. Of course, we need to have state-of-the-art technology. We need to have great commercial partners, because they're the ones that are the big financial contributors to us being able to get the greatest technology and hire the best racing drivers. And with a Formula One team, if you don't have all of that put together, you're not going to win. And in our sport, you lose more than you win, so you better get used to that and get ready to respond for the next race.
That was Christian Horner, followed by Zach Brown, two of the people that Matt talked about. And we also did talk to Gunther Steiner, who put together the Haas team. So I was fascinated. I've watched these races and knew a little bit about them. I was fascinated by how much money's involved. But it was really, as you know, Matt, really sort of a lost leader, as it were. People did it because they really loved it and they invested a lot of money. But now it's turning into really a profit maker as well because of so much U.S. participation.
Yeah, and a lot of it is down to a man we used to call the Darth Vader of cable, right?
John Malone, would you be referring to?
The kids now don't even know what cable is, but yeah, John Malone has really revolutionized the way we watch this sport. And And who watches this sport, right? Because he's brought it to America in a big way.
Yeah, and of course, and then we've had Miami and we've got Las Vegas this weekend, actually, which will probably determine the Constructors' Trophy. And John Malone with Greg Maffei, actually, who just has decided to step down at the end of the year, have really transformed it. But it helped a lot, that Netflix series, I think, because so many people watched it, people who otherwise would never watch Formula One. But, you know, when talking to Gunther Steiner, who put together Haas, I asked, how much does it cost just to put the team together? He said around $350 million, you know, before you do anything. And then obviously you pay a fortune to the drivers and to the teams and the engineers. There's hundreds of people on the teams of one of these race car drivers. It's really quite extraordinary.
Yeah, I was talking with David earlier, Emily, about the guy who does aerodynamics. Yeah. Well, now he's going to do it for Aston Martin, which was bought by billionaire Lawrence Stroll a few years ago. He used to do it for Red Bull Racing, and Red Bull was winning like every single race for a couple of years because of this guy. It's really so much about the aero. So they agreed to pay him $42 million a year to come over and do their aero at Aston Martin. Now, this isn't the driver. This isn't the chief mechanic. This is just the guy who designs like the panels and decides how they're going to tilt.
For how many years straight?
I'm not sure how long the career is, but I just thought the contract is. But I just thought it was insane that he makes more than, you know, one of the titans of Wall Street. This guy makes more than like an NFL quarterback who's winning Super Bowls.
And then a lot of them move to Monaco for a very simple reason.
Yes.
No taxes.
Yes.
You know, so you get it tax-free.
It's a very good reason.
But I'll give you another number besides the dollars involved. In talking to Oracle Red Bull, they run 8 billion, that's a billion with a B, simulations before a race of every possibility of what's going on the track with all their competitors and everything else in order to determine just exactly how they can fine-tune this car.
Yeah, I imagine actually, and I haven't really thought about this, but AI must be a huge turning point for this sport because, as you mentioned, they spend so much money doing these things. If you're going to pay Adrian Newey $42 million a year, you might as well at least train your own model and have AI do it for, you know, decades.
Right.
Pretty fascinating stuff.
It's going to cost a fair amount to actually train that model.
Yeah, that's a good point. As I was saying it, I was
all
thinking
that data. Well, I'm sure they'll figure it out, but it's going to take a lot of data and a lot of compute time to put that together, I think.
David, what else should we expect for tonight's edition of Wall Street Week?
Well, from the ridiculous to sublime, and we're going to do sovereign wealth funds. I mean, as you recall, one thing that incoming President Donald Trump agreed with outgoing President Biden about was maybe a U.S. sovereign wealth fund. So we sat down with Nikolai Tangen, who runs the largest one in the world, the Norway one, which is $1.7 trillion, believe it or not. They own 1.5% of all the equities in the world for 9,000 companies. And we said, okay, how does it work? Why does it work in Norway? And could it work in the United States? And he is skeptical. And Larry Summers is more than skeptical because he makes the basic point, yeah, Norway had extra money lying around to invest. The United States is borrowing as fast as it can. And does it really make sense to borrow money in order to invest it? Is that a sensible use? As Larry says, why don't you just cut the deficit? I mean, if you're going to try to save some money.
Right.
I can't imagine what the fund would invest in. Would we see that investing?
Well, what does the Norway's bank invest in?
But that's one of the big issues. That's a very good point because Norway has had this for some time. They've got a statute that says what they're supposed to invest in, and they don't have the same partisanship as here. One of the issues actually is if there was $1 trillion lying around to be invested, what U.S. president, whether Republican or Democrat, could resist the temptation to sort of put their thumb in the scale and say, well, let's invest in this that really might help me in my next election. That's one of the issues.
Yeah, or my donors, right? This is the crony capitalism that Ken Griffin was warning about. Doesn't Alaska have some?
Alaska's had it for some time. They got $80 billion, and that's because they put it in place when they had the big oil windfall up there. And they actually, we interviewed Steve Dunleavy, who is the governor there, about it, and they actually have not had partisanship enter into it at all. They've been very steadfast in it. And as a result, if you're Alaskan, you get a check every year. They just write you a check. It's like a guaranteed minimum income. Not that large, but a few $1,000s every year. And they're still building up their corpus. Because part of the theory of all this, which makes some sense if you're getting it off of natural resources, those are depleting over time. So the question is, for the next generation, what are they going to have? So the idea is, as you use up the natural resources, there'll be something left for the next generation. A novel idea that I'm afraid federally we're not pursuing very actively here in the United States.
It'll be
worrying about the next generation.
It'll be fascinating to see how it goes. I mean, we do have more oil, right, than anybody else. And we can also borrow at lower rates than anybody
Well, and
else.
Dunleavy said you might be able to just take the royalties off the U.S. oil.
All right, very interesting stuff. Definitely tune in to Wall Street Week. That's tonight and every Friday night at 6 p.m. David Weston talking about sovereign wealth funds as well as the business of Formula One as we get ready to race in Las Vegas. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Bitcoin just above 99,000 now, 99,067. Stocks pushed higher today. Blue chips and small caps led the gains. S&P up 20 to 59.69 as we head into the weekend. A gain of 0.4%. The Dow up 426, up 1%. Nasdaq up 31, up by 0.2%. 10-year 4.41%. The 2-year 4.37%. Spot gold up 1.5%, 27.09 the ounce, and West Texas Intermediate crude up 1.6%, 71.25 for a barrel of WTI. New Jersey Governor Phil Murphy says while he is committed to trying to block New York City's congestion pricing plan, he is open to negotiating a deal that would allocate a portion of the revenue to his state. Murphy was interviewed today right here on Bloomberg Radio.
Listen, I think we've got the strongest environmental record of any state in America over the past 7 years. I'm proud of that. We're not against lowering pollution. We're for that. But there's a time, there's a place, there's a deal that works for New Jersey commuters and ones that don't. And this displaces the pollution to New Jersey. It doesn't get rid of it. It's an enormous burden financially on our commuters. And lastly, none of the money comes back on our side of the Hudson, where we've also got transit fiscal challenges.
And coming up, we will have more of that conversation with New Jersey Governor Phil Murphy right here on Bloomberg Radio. Again, recapping, S&P today up by 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. All right, well, we're joined now by Craig Mundy, president of Mundy and Associates, and also former Microsoft Chief Research and Strategy Officer, on location on Zoom in Washington, D.C. He's here to discuss his new book, Genesis: Artificial Intelligence, Hope and the Human Spirit. And this was co-authored with former Google CEO Eric Schmidt and the late Dr. Henry Kissinger. I want to get into the book and the future of AI and humanity, but I first want to ask Craig about just how this partnership of the three authors came together and the idea for writing this book.
Turned out I've known Henry for about, well, it would have been 27 years now. Back in the earlier days at Microsoft, we started to deal with a number of challenges on a global basis, and I was introduced to Henry, and we became fast friends that lasted another 25 years. And so we talked very regularly, almost twice a month. We'd sit and talk for a while. And that evolved about 5 or 6 years ago to a discussion more and more around artificial intelligence. Eric Schmidt, I've actually known since he was originally joined Sun Microsystems, so probably pushing toward 40 years now. And Eric and I, encountered each other in a number of ways and places. We both served President Obama as science advisors during his terms. And we got a chance via a meeting that we attended with Henry about 6 years ago to get Henry first exposed to what was happening in artificial intelligence. And he was, I guess, 94 at the time or something. But he was completely taken by the issues that he thought would be created by the emergence of a super intelligence. And because his background was in philosophy and history as well as diplomacy, he got more and more interested and involved in that. That led to Eric and Henry, and Dan Huttenlocker from MIT wrote a book a few years ago. We started to talk about the issues, but it didn't really talk so much about possible solutions. And the discussions I was having with Henry at the time were targeted a little more at this question of solutions than the very long-term issues. And that led to the three of us coming together and deciding to write a second book that would focus more on both the upsides and the strategy for how to manage the downsides. And that's Genesis.
Genesis, I guess, the beginning of this new era that we face. What I find most interesting is with the involvement of Henry Kissinger, then to me it means you can use artificial intelligence to do more things than like make Siri better, but maybe solve the Middle East conflict. And I wonder how AI would attempt to do something like achieve world peace. How would you use that tool to reach that goal?
Well, you chose an interesting word, tool. In the book, we talk about our view that over the long term, our involvement with and ultimately relationship with these super intelligent machines goes through three phases. First phase we're sort of in now is where we use it as a tool, much like we have in all the other inventions mankind has made. But we think this is the first one where things have to move beyond thinking of it as a tool that just amplifies our own capabilities. We call the second stage coexistence, where humans come to the realization that, in essence, these machines are like a new intelligent species. And in fact, it's probably super intelligent relative to humans. And while it's not a biological species in the way we normally think about it, it has sort of all those other properties. So that puts us in a situation where we want to think about how does this other intelligent species help us? And that brings on many new issues, philosophical, societal, and technological. And so, there's a lot of focus on that. Assuming we manage to get through that in a positive way and humans come out the other side, in kind of a new environment, then we end up in a stage we call coevolution, where, as has happened with biological species over the millennium on Earth, each of these things begins to affect the other, and you end up with some long-term symbiotic relationship. And while we can't really define what that'll be in advance, we expect that that's where this ultimately ends up. And so in that regard, at each of these points in time, how AI will affect everything, including diplomacy and international relations, as well as science and discovery and politics. We look at some of those issues specifically in the book, but I think in each of those three phases, the role that the AI plays in moving toward resolution, could be quite different.
The description of the book said that AI might well solve some of the greatest mysteries of our universe and elevate the human spirit to unimaginable heights. I'm wondering what the book, in this exploration of AI, actually teaches the reader about what it means to be human.
Well, one of the things that we point out in the book is that humanity is ultimately going to have to redefine the things that we think characterize humanity. We call in the book for the need to redefine dignity. Dignity as a base, of giving people sort of purpose and self-respect, we think is going to have to be rethought once the AI begins to not only be smarter than we are in virtually every field, but where the emergence of it in conjunction with robotics and a redistribution of work. In many ways, humans have always had to work in order to be able to survive. And in that environment, work becomes a big component of how they view themselves and produces dignity. And, as the AI and the evolving technical environment changes the relationship between work and humans, we're going to have to rethink what these things are. And so, the book tries to point to areas where we think the emergence of super intelligent machines will benefit humans in science and discovery and things like healthcare and education. But in the long run, it's really also a call for humans to come together with some urgency in order to be able to continue to redefine and utilize our own agency during this transitional period.
And do we continue to control this technology or this super intelligence? Because it sounds like in the final phase it becomes near to omniscient and omnipotent, but I'm not sure that there's any reason it would be omnibenevolent. Like, I always think of the three properties of a Christian God. Is it really going to want to do good?
In the book, we talk about a new idea that's emerging in some quarters academically and a little bit, it's been the focus of my own work in this area, which is to try to think about how do we engineer the AI in such a way that, in fact, it does have a fundamental grounding in the same value systems that are important to humanity. Without that, you could say, and of course, many of the things that have been written in the last couple of years tend to be sensationalized, vis-a-vis the risk of the machine and the humans. And, our own view is that if we want to contain those risks, there's ultimately no way to do that other than by building a trusted way in which the AI itself is involved in policing its own actions. And, you know, we've come to believe that that's possible. And so if we can build this kind of trusted system that can monitor and to some extent control the use of all the other AIs collectively, then we think that we can avoid many of the downsides and get the full benefit of AI without suffering a substantial risk that the AI becomes basically adversarial to humanity.
Fascinating. Really fascinating stuff, Craig. Fantastic that you get a chance to write with Dr. Kissinger, his last piece of work, at least his last book. Craig Mundy, there on his book, Genesis, Artificial Intelligence, Hope, and the Human Spirit, which he wrote with Henry Kissinger and Eric Schmidt. Thanks very much for joining us. All right, we are going to talk now a little bit about something more today, or at least, you know, this year. New Jersey Governor Phil Murphy is committed to blocking the current New York City congestion pricing plan, even as the federal government gave its final stamp of approval. Murphy spoke exclusively with Bloomberg Television's Scarlett Fu and Romaine Bostick. Here's some of their conversation.
We're going to try like heck. It's not that, listen, I think we've got the strongest environmental record of any state in America over the past 7 years. I'm proud of that. We're not against lowering pollution. We're for that. But there's a time, there's a place, there's a deal that works for New Jersey commuters and ones that don't. And this displaces the pollution to New Jersey. It doesn't get rid of it. It's an enormous burden financially on our commuters. And lastly, none of the money comes back on our side of the Hudson, where we've also got transit fiscal challenges.
Right.
So with all due respect to the MTA, we want them to solve their problem within the four walls of the MTA, just like we have with NJ Transit in New Jersey. And perhaps when the gateway tunnels are finished and you've got 4 tunnels with rail tracks as opposed to 2, or when the Port Authority bus terminal is finished, the new one, which we've got both going at long last, there's a time and a place perhaps, but not now.
Okay, I'm going to follow up on a bunch of those questions, but first of all, when it comes to congestion pricing, you have said that you're open to a form of it. What would that plan need to look like for it to gain your support?
I don't have the parameters of it, but it would need to be a reasonable price, discounts that make sense, an amount of money that comes back to Jersey, and a timetable that allows our commuters to look at what their options are. I think that's a reasonable, by the way, what we've asked the federal judge is not, we're not asking for the moon. We're asking that he force the federal administration to do an environmental impact study, and we'll live with the results of that.
Have you had conversations specifically with the governor of New York, Kathy Hochul, as well as the mayor of New York about those issues? And if so, what was their response?
So we've got the good news is we start in a very good place with our relationship with both Eric Adams and Kathy Hochul, and we do an enormous amount with both the city and the state together. Yes, we've spoken person to person, team to team, and this has been a multi-year process. And our ask has always been, let's do an environmental impact study, and at the same time, let's get at the table together. And while that's playing itself out, let's talk about what the contours could be of a deal that we could all live with.
But this congestion pricing plan is more than just about the environment. It's obviously to alleviate congestion as well. The idea that there are just a lot of folks coming into the city that, you know, at least certain people think maybe shouldn't, or they should take public transit into the city. If you don't have the congestion pricing, what is the solution to alleviate the traffic conditions?
So let me say first and foremost, and the MTA wrote this themselves, the number one objective here is to solve their fiscal hole. They've said that themselves. That's it. Don't take my word for it. While congestion and lowering pollution is a noble objective, and it's certainly one of their objectives, it's the number one objective is to solve their fiscal hole. We've got the same challenge at NJ Transit. We've chosen to solve our problems within the 4 walls of New Jersey. We put in a corporate transit fee while New Jersey Transit takes a few years to get back on their fiscal feet, which it will take. All the big transit systems, by the way, in the country are going through a similar reality. We've found a fee, which we don't do lightly, that will allow a bridge to a better fiscal future for them. I don't know what the alternative is for the MTA, but I strongly would like to encourage them to pursue other avenues. As for New York City, we root for New York City. its success in so many respects is our success. I don't know why, for the life of us, when people are working from home, we're still digging out from a pandemic, why New York City would want fewer people in New York City than more, but that's not my my domain.
All right, that was New Jersey Governor Phil Murphy there talking about his fight against the congestion charge. To me, it seems like he fundamentally misunderstands what's happening and how a congestion charge affects the economy of a city. So I spent my time as a cub reporter in London. They put in a congestion charge long ago. It's far more than what New York wants to implement. I think it's around $20 if you want to drive into the city of London. And we're looking at about $9 here in Manhattan. I think the point of this is there are way too many cars, not too many people in New York City, right? So for example, I drive here every day. Usually, if I'm driving my own car, I drive my Dodge Challenger RT Scat Pack wide body with a 6.4-liter naturally aspirated V8, right? If there were a congestion charge, even only $9, I would no longer drive my car in and out of the city.
Because you would pay that $9 twice a day, right? Going in and out.
No. Only once a day. Only going in.
Okay, but still.
I don't want to pay an extra $9 a day on top of the toll. It's actually ending up costing me more like $20 or $30, I guess, toll both ways to drive in and out of Manhattan. So I would just take the train. That means I wouldn't be driving my 6.4-liter V8 in and out of the city. There would be less pollution, there would be less traffic, and probably less aggro all around, right? I would just take the train instead. And I think a lot of people would make that decision. So to me, it makes perfect sense. I would do double.
New Jersey Governor Phil Murphy said, we're going to try like heck to stop congestion pricing in an interview with Bloomberg TV.
Yeah, he did, and we'll see how well he can work with Eric Adams, as long as he stays in office, and Kathy Hochul, and what kind of support, it would be ironic, Phil Murphy will get from Donald Trump when he comes back into the White House. Right now, let's get over to Charlie Pellet. He's got a Bloomberg Business Flash. Charles?
Hi, thank you very much, Matt Miller. And here's what's going on. Turned out to be an up day, up week as well. The Dow, the S&P, NASDAQ, all advancing today. We head into the weekend with the S&P at 59.69, up 20, up by about 0.4%. The Dow up 426, up 1% today. NASDAQ up 31, a gain of just about 0.2%. Your 10-year 4.41%. It's the 2-year at 4.37%. Gold up $41 the ounce, above 2,700 now. 27.11 up 1.6%. West Texas Intermediate crude up 1.6%. 71.21 a barrel on WTI. Bitcoin today surging 0.9%, trading above 99,000 right now. 98,977 on Bitcoin. George Young is portfolio manager at Villary Funds, and right here on Bloomberg Business Week, he told us he is looking for the rally to widen.
The Magnificent Seven has dominated things. The S&P is up 10% per year for each of the last 3 years. Small cap world, Russell 2000, basically been flat for 3 years. So all of a sudden in the last 6 months, and pronounced, especially in the last 10 days or so, we've seen more credibility and more viability in the small cap sector, which is great for us, those of us who are in there.
George Young of Villary Funds interviewed on Bloomberg Business Week. Gap surged 12.8% today after earnings, bringing other apparel retailers with it. Abercrombie and Fitch up by 7.4%, and Urban Outfitters up by 4.3%. So again, recapping, stocks higher, the number you want to know, Bitcoin up 0.9%, 98,971. S&P up 20, again up 0.4%. For on-demand news, 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thank you very much. Charlie Pellet there with the Bloomberg Business Flash. We are continuing to wind down this Friday. Emily Graffeo and Matt Miller here in the Bloomberg Interactive Brokers Studio, filling in for Tim and Carol as they lazily fly back from San Francisco after breaking some news at the Schwab conference.
They got the Schwab new CEO, to say that he feels silly about buying crypto and that they would consider
About not buying crypto.
about not buying crypto.
I don't think many people feel silly about buying Bitcoin right now as we approach $100,000. Do you think we hit it over the weekend?
Yeah, maybe.
Because, you know, they trade 24/7.
Right. People don't want to trade, well, they can't trade stocks. So if they have to scratch that trading itch, maybe they just all go into Bitcoin. But we'll see. We've actually moved down a little bit now.
All right, let's talk right now about the environment and waste management, or now it's known as WM. We have Tara Hemmer right now out of Houston, Texas, joining us, Senior Vice President, Chief Sustainability Officer at WM. And as we, look at the rising temperatures, the rising wind, natural disasters, how can WM or waste management help in this crisis?
Well, thank you so much for having me. And it did take me a while to get used to the name change to WM. But it really is about the fact that WM, we handle so many different material types each and every day. And a lot of people don't know this about us. We are the largest recycler in North America, and we've made significant investments, announced a $1.4 billion investment in recycling infrastructure across North America from 2022 to 2026. And this is about bringing access to communities. Recycling is something that's so tangible and people can get their brains around, but there are some myths around recycling that we really want to work towards, so to speak, myth busting.
Yeah, I have to admit, I do recycle. However, I also typically will like a meme that has to do with the fact that, like, why am I recycling my yogurt container when, a CEO is taking a private jet 30 times a year? But I still recycle. But Tara, I'd love to hear kind of what your recent recycling report kind of showed about consumer perceptions of what the impact of recycling actually is. Because sometimes when you put your yogurt container in the recycling bin, it really doesn't feel like you're doing much.
Right, that's right. Well, the most important, we did this study because we wanted to understand what are consumers' preferences and what's their understanding around recycling. And what we found was really fascinating. We found that consumers really are interested and want to know more about 4 key areas. They're interested in learning more about recycling. They want to be educated about what happens to their materials. They need more access to recycle. Some communities don't even have recycling as a service, and that's something that's incredibly important. And then what we also found is that consumer brands, there's a lot of brand pull from millennials. And so I'm so glad you brought up the example of yogurt containers, because when I meet people in my community or my neighborhoods, a lot of people are really interested in, can I recycle my yogurt container? And then what happens to it once it gets recycled? The thing is, we need to bring to life what happens to the materials that you put in the bin. A yogurt container in our world, it gets turned into paint cans, as an example. Or your water bottle that you might put in your recycling bin, it could get turned into another water bottle. It could get turned into apparel that you wear each and every day. In our case, it gets turned into our employees' uniforms. There's no greater circularity story than that. And in other instances, it gets turned into carpet that goes into homes. So it's important to know that if you are putting the right recycling types in your bin, it does get turned into other products. And the vast majority of it stays in the United States.
Right. Although there are a lot of caveats there. So, by the way, this is the second time we've talked about yogurt on today's show. I think it's funny because there's so many SKUs, right? If you go to a grocery store, there's nothing they have more different kinds of than yogurt.
Right.
I typically eat Siggi's yogurt, and when I'm done with it, I'm always wondering, do I have to rinse the yogurt out of it before I put it in recycling? Do I need to rip off the paper label and put that in the paper recycling bin before I put my yogurt in the plastic recycling bin? And then when that all goes into the bins, what are the chances that the garbage men are actually going to take that stuff to recycling, or are they all going to throw it, as I suspect, in the same giant bin that they throw all of the other garbage into, you know, or sell it to a company that just ships it off to Indonesia and floats it in the ocean outside of Jakarta rather than recycling it? I think the transparency problem is a really big one. Tara, how do you overcome that?
Well, first and foremost, I want to underscore at WM, we take recycling extremely seriously. It's one of our more significant business lines. And when we collect your materials at the curb, it goes to a WM recycling facility or a recycling facility that we're vetting. And we have very sophisticated technology. I think this is something that people don't really understand. When you throw your yogurt container, your water bottle, your cardboard boxes from all the e-commerce shopping that we're doing, and you put it in one bin, single stream, we have advanced technology that sorts it out. So pulls out that cardboard container from all of the other things that it's commingled with. And we send it in a lot of instances to domestic markets. And that cardboard box might get turned into a pizza box that shows up in your local neighborhood. And regarding plastics, you know, I've heard this from others too, like, do I rinse my material? I've heard of people putting their peanut butter jars through the dishwasher. Don't do that. From an environmental perspective, but also we want to have these materials mostly clean. And so if you can just, you know, give it a quick rinse, that's great. But when it ends up at our facilities, we're still able to pick it out. And we work really hard to build markets for these materials. That's a big part of what we do. And I think the other reason why we did this study is there is a recognition that people are confused and they want to better understand where, if I'm doing all this work, where do my materials go?
Tara, we're going to have
something that
sorry, we're running up against the clock, but we're going to have you come back because this really is fascinating stuff and interesting to hear what WM does and how dedicated you are. Tara Hemmer there, Senior Vice President, Chief Sustainability Officer at WM. This is Bloomberg.
is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, we want to hear what you want to hear on Bloomberg Radio. Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcasts and click the link in our profile or community section to take the survey, which is hosted by our partners, Material. I guess our partners are just called Material.
Material.
They need a better name. Fill it out now at youtube.com/Bloomberg Podcasts. And we put the QR code on the screen. If you're watching us on YouTube now, you can just click on that QR code. All right, let's get to the most important issue of the week, and that is what I'm driving.
Yeah, we've talked about a lot. We've talked about yogurt. We've talked about Gen Z mattresses.
Avocado, apparently.
Avocado. We've talked about matcha lattes off air. And now we finally get to talk about a Matt Miller subject.
Yes. Well, and I mean, I do have a podcast. I'm not sure if you're aware. I do a bi-coastal podcast. So Hannah Elliott, who is our brilliant luxury reporter for Bloomberg Pursuits out in Los Angeles, she and I team up every week to talk about cars. And it's not your typical Bloomberg, like the business of cars. We're not talking about EBITDA, right? We're talking about cars that are cool, cars that we like. We're talking about old cars. We're talking about new cars. We're talking about big trucks. We're talking about little sports cars. We're talking about everything basically around cars. And we usually have pretty fascinating guests to highlight these issues. This week, I have been driving a car the likes of which I'm usually fairly skeptical, an electric vehicle, right? It's a giant truck, a GMC Sierra, which is like one step up from the Chevy Silverado. You can see here, it looks a little bit futuristic, but still recognizably like a pickup truck. If you're watching on YouTube, you can see it here. It's kind of styled like, if you remember the Chevy Avalanche, they had that sort of convertible-looking C-pillar in the back. But this is a fully EV car. There's no motor at all. And normally, I'm not down to clown with totally electric vehicles because I don't like recharging them. I don't really have the space or the power at home to do it. And it takes forever, especially, to be honest, this vehicle, it has like a 200 kilowatt hour battery. So when I park it at the garage across the street and have them plug it in, it takes 2 full work days for them to charge it from like 20% to 80%. Yeah, it's a gigantic battery. But the upside of that is massive range. So this truck, it's the edition 1. It's the first edition. They don't really come out till next year, but if you pony up like $100 grand, you can get this one.
Okay.
Has a 460 mile range.
Okay, but then if you were going on a super long car trip that was over 460 miles...
Well, you'd stop at a supercharger, right? The garage across the street doesn't have any kind of like level 3 charging. It's just a plug in the wall.
Yeah.
If you're driving cross country, you stop and you take 45 minutes or an hour to charge it all the way from nothing to full. But most people aren't taking trips that long. Hannah, for example, was just driving from LA to Las Vegas, and that's a drive she does quite a bit. She leaves her really cool house in Los Angeles and goes to some swanky hotel in Las Vegas. It's about 260 miles, I think, round trip, maybe 300. But this truck could make that easily. And then when she gets to wherever she's staying, the Bellagio, the Wynn, whatever it is, she can plug it in there and it'll be fully charged by the next morning. The reason I like this truck is pickup trucks have become, you know, it used to be something that farmers or construction workers would use, and now they've become really like a luxury family vehicle. There's so much room in the back that I can fit my 2 rear-facing car seats back there and still scoot my seat all the way back and have a lot of leg room. I can put the stroller in the back. I can put the groceries in the front. And the difference between this truck and any other truck on the market is that there's not just a tailgate in the very back, but in the midsection between the cabin and the bed, you can open up that back.
Oh, wow.
And if you're like at Home Depot getting 10-foot 2x4s, you can shove them all the way in there.
Getting an avocado mattress.
Or that, for
You
example,
can put
or
that.
skis or whatever. So I just think it's such a cool vehicle, and in that there's so much storage and there's so much space for activities. Plus, I've come to the conclusion that driving around New York City, a typical unibody vehicle just doesn't cut it. The suspension gets destroyed after a few years on these roads. And a body-on-frame truck is really the answer to that. And then finally, it's so luxurious. This is the Denali version, so there's real wood, real leather. But the best benefit, I think, of all GM vehicles is General Motors and Mercedes-Benz, in my opinion, have nailed it on the infotainment systems. I mean, they're so intuitive. I don't even complain about not having physical buttons. I can do everything through the screen, and it just works well.
You can listen to Bloomberg Radio.
Indeed, I do listen to Bloomberg Radio. As soon as I get into any truck or car that I'm